the oil trade that I took based on continuation pattern here. So we had a high formed here, and we've been breaking market structures ever since. So this morning to last night, when I looked at the market, we had created these lows, and my intention was to come up into this 50% or in this fair value gap and show some type of a reversal into a continuation lower. So what did I see this morning is the fact that at 10 o'clock we had this divergence here on 4-hour candle with gasoline. So this is where I started to formulate the trade idea, is that we're in that 50%, right? We're in the discounted premium area for a possible continuation short. So based on the 4-hour divergence, you would drop down to 50-minute chart and see a change in state of delivery here, right? But what I've been noticing after back testing is that 50-minute, oftentimes you are kind of on the late side, especially with this type of movement here. So if you can see the 50 minutes, 10 o'clock candle closure, if you enter right at the candle closure, right, you have this retracement up. You might have to hold through that, and then obviously you get a push down. But if you were to enter from here, right, your stop loss would be way up here, right, where the manipulation is, so that your risk to reward ratio, it does not make sense. So I started going to 9-minute chart. In this case, 9-minute chart did not give me a good option either for entry pattern. And then so I went down to 5-minute chart to see a clearer picture. So basically what I did was I measured out this movement up, this up close candle for a movement up, right? And I saw that 2 and 4 here were still relatively far away, 2.5 to 4. So what I did was I entered a position right after this candle. So as this candle closed 10:05, right, I think I entered at 10:03, 10:04 because the candle was way below this change in state of delivery here. So at 10:04, what I noticed was that candle was somewhere around here, even down here, right, and then it retraced up. As soon as it started closing below here, I think it was 10:03, 10:04, I entered a position here, right? That's why the market is up here. And then once it closed, I entered another position here, and my stop loss, let's say I entered here, my stop loss is still above these up close candles, and then down to these areas of 1-to-1 trade. So this trade ended up being 1-to-1, which is the risk to reward ratio was kind of 1-to-1 is something that I don't prefer. 1-to-2 is something that I really like. But in this case, the setup was so good that the divergence, the 4-hour chart was so good that I could not fail to pass this one up. So I entered 2 positions based on the divergence on 4-hour chart. I dropped down to 15-minute. I didn't see a clear picture, so I started dropping down to 9-minute, and I did not see a clear picture. And I dropped down to 5 or even a 6-minute chart. The reason they're so random numbers is that I just sometimes the picture is a little bit more clear on 6-minute chart as opposed to 5-minute chart. And then for entry wise, sometimes the 9-minute chart gives you a few minutes earlier entry compared to a 15-minute chart. Now, I did not trade the indices, but I do kept a close eye on it, how it was being traded. And the reason I didn't trade US indices is because we have a non-farm payroll coming out at Friday 8:30. So prior to the non-farm payroll, it can be a little shaky sometimes. So, but nonetheless, I wanted to highlight a couple of things here. So obviously, we've been going at a down. I'm on a 4-hour chart, but the 4-hour chart seemed to be a little bit more clear as opposed to a daily chart. Right, the daily chart we had, well, my analysis was also off a daily chart. It's because we have an up close candle here that we caused a change in state of delivery on Monday, March 3rd. Right, we went back up into it. Right, what are we seeing? We're seeing doji formation here. Right, nonetheless, what we started seeing was that we had an up close doji here. We closed above it, so there was no any type of divergence that I could see. Actually, there was a divergence on daily chart, right? So there was a divergence here on daily chart. We had a lower, we had equal high. Well, this divergence wasn't very clear to me. That's what I wanted to say, is that, yeah, you can argue that this is equal high here, whereas on ES, we ES we had a lower high here. So this lower high was pretty clear, but on NQ you could have labeled this as equal high or even a lower high. So initially I had classified these at lower high. I mean, you really have to look into it to see that these are kind of lower high there. So nonetheless, we are showing a resistance going above this order block here. So I wanted to kind of like consolidating, in my opinion, and daily charts. So that's why I went down to 4-hour chart. And what I noticed on 4-hour chart is that there are a lot of confluences with the daily. So this is the daily order block here. We have 2 down close candle caused a change in state of delivery on Friday. Why these 2 down close candle? Because these down close candle had a divergence in them. So this is low, higher low, versus on ES this is a low, lower low. So that's why I kind of highlighted those two. There's an SMT there. And then on Monday we had a change in state of delivery on 4-hour chart from these from this up close candle. So we have change in state of delivery. So we had this opening price of that. We have the daily order block of the order block, and then I highlighted these two as possible area to look for, because smart money bought here, took it up, and then we crossed over onto the lower side. So on Tuesday, Wednesday, basically consolidating around this area, and then on Thursday, what I saw, we had this huge drop down. If you look at it on Thursday, on the 15 or 30 minute chart, you see Asia consolidate tightly around that area, and then London we have a push down, right? So no clear reversal here. Same thing with ES, right? No clear reversal here, right? It's just a push down. So what can I expect? I expected Thursday New York AM session to give me some type of a reversal or a manipulation, right? So the manipulation came in the form of let's see, how did I do this? No. So the manipulation came in the form of a 4-hour chart. So we have 4-hour chart, we have a drop down here in London, right? We have created this fair value gap. So then I started to highlight this as a possible area for a area to reverse from. Now we did not have a divergence on this 4-hour chart here, but we did come into an area of a fair value gap. So if institutional order flow is bearish, we should see some type of a movement off of that. So I started highlighting my candles here. So for our candles, right, I should see some type of a change in the state of delivery after taking these highs. So on a 15-minute chart, we can see that right at this candle, right? Now you would consider these up close candles, so change the state of delivery for you would have been up this candle. But if you look closer, what I started noticing is that we had this series of up close candle, right? This candle right here, 11 o'clock. What do you notice? Right here, 11 o'clock. You see that? That's a subtle sign there. It went above it. So as soon as there was a change in state of delivery at that candle, right? See. So this candle took the liquidity. Same thing. So same thing. These two candles took liquidity, right? And then we had a change in state of delivery here. So if you look at our 15-minute chart, same thing. I mean, the entry would have been 11:15. So your entry would have been at 11:30. 9-minute chart again. If you were to look at this, 11. So you had a change in state of delivery at 11:33. You would have been entered at 11:42, right? So a little bit later, entered 9-minute chart. But the idea was that we had a change in state of delivery for a possible short down. Takeaway from this part of the review is that these up close candles, you would think that the change in state of delivery would happen right here, right? But actually, if you look closer, this up close candle that took liquidity becomes your high probability order block, right? So that was a takeaway there from this session. Once that session happened, I did not take this trade again. Once this session, because I was in an oil trade. Once this session happened, so let's say you had a change in state of delivery off a 15-minute chart, right? Your stop loss would be somewhere above here, right? And you can measure that as your manipulation. So 2 right here, 4 right here, right? So if you were to do 2 entry there, that's a 1 to 1.5. So let's say you would have hit 1 to 2. You would have hit 1 to 2, and then obviously 1 to 4 would be somewhere around here. You would have hit that 4.